Lately, I have been increasingly enthusiastic about sustainable energy. All these companies, particularly in solar energy, have seen a huge increase in revenue and profit growth in recent years. However, there is now an excess of supply. So, the supply and demand are no longer in balance, and the companies have been severely punished, including Canadian Solar. Recently, I have taken a position in Canadian Solar, albeit a small one, and I will explain in this video why, but note this is purely for inspiration. It is an overview of tools and analyses that we use to help you possibly make your own choice, and if you understand this, then you should not invest. Based solely on the entire cyclical development and the future, I think that Canadian Solar is actually significantly undervalued. I do not know the exact intrinsic value. It is difficult to determine, but I dare say that it is high due to the current price, and I will substantiate this in this video. First of all, the price is at the same level as in 2006, 2009, and 2010. And what is it? It is far below the price level of 2014, 2017, and so on. And the stock has dropped significantly in the short term, but what we see below in this graph is the MACD, which was quite negative, is slowly starting to show a positive trend. It is still below the zero line, and this is purely technical analysis, and that is just purely for support. But it is never a decisive factor for investing. Only the trend is starting to increase. That is a fact, and this is useful. Technical analysis as a supplement, but really only as a supplement to determining intrinsic values, and you should buy stocks when you think they are undervalued. One should actually not buy too early. I don't know if it is too early, because it could be that the oversupply of solar panels and such in the sustainable sector is still too much. And if the demand continues to decrease, that poses a problem. It seems that the stock is undervalued, and I am willing to wait several years until Canadian Solar is back in an upward cyclical momentum. And that MACD is starting to rise now. And we have seen this once before, namely here. We see that in 2009, a significant decline. And then we see that the MACD starts to increase before the price begins to rise. So that's just a handy, funny, long-term trend based on technical analysis that can help. But again, this is not a decisive factor. It is about intrinsic value. For the sake of completeness, I have taken a small position, apparently just a bit too early, as I am down 6%, and I purchased this at the beginning of this week, so it is actually very recent. And it is also a relatively small position of about 2% in my Interactive Brokers portfolio. But overall, since I have other investment accounts, it is actually much lower than 2%. Now I think about 2%, what is the use of that? Yes, the risk is of course that you buy too early and that the stock can drop further. And I am willing to let my share in Canadian Solar grow to 5% in this portfolio at least. If the stock does continue to decline in the short term or forms a bottom, then I will buy an additional share. So if that doesn't happen and it continues to rise, then I find that 2% fine as well. Now, analyses have been made, of course, and for example, Morningstar gives a fair value estimate of 30, which is significantly higher than 14. Now, assuming that this analysis is incorrect, but let's say the fair value is 28, then you have a margin of safety of 50%. Even though the fair value is lower than that, I think there is always a margin of safety. Only in the short term can it be challenging. Now, what I find very important is that the current CEO, who is also the president and chairman, so yes, when it comes to conflicts, this is not convenient. But this person was established in 2001 and is still always a member. A brief overview can best be found through investor relations. You should actually read all these reports to understand why Canadian Solar might be interesting, and I will explain to you why. The current market value of Canadian Solar is around 850 to 900 million, and that seems very low when you see what kind of revenue they generate. And very importantly, they have an 80% share in Recurrent Energy. That is project development in solar energy, so building solar energy projects, but also building battery, energy, storage, essentially project management. And what is important here, there is a little footnote. And if you zoom in on that footnote, it is noted that in early January 2024, Recurrent Energy attracted an investment of 500 million from BlackRock. In other words, BlackRock is willing to pay 500 million for 20% of the shares. This means they value the company at 2.5 billion. That investment of 500 million is almost equal to the market value of Canadian Solar. And if the valuation of 2.5 billion is correct and Canadian Solar sells it, then they would distribute everything to the investors. Then you would already have a return that is significantly higher. So it seems that Canadian Solar is really very undervalued. And now something else. I read a book about BlackRock. They are known to invest or when stocks are in a cyclical dip. The cyclical dip is very easy to see. There have been multiple all-time highs in the long term, and for whatever reason, you often have a distressed business in a distressed industry. It is very important that those companies are in a state of panic at this moment, and also that the sector is in a state of panic. And then it seems that the market has written off the stock, while Canadian Solar is actually not distressed at all, because they simply generate relatively healthy EBITDA. The EBITDA alone in 2023 was 800 million. That is almost equal to the current market value, and the net income was 2.7 million. Now here in this analysis or report, there are of course all kinds of figures, and they want to make it sound as nice as possible. Just an investment could be worth it based on that Recurrent Energy. What I personally find interesting by nature is their branch in battery energy storage. There are several solar companies, for example Yinko Solar, which also seems very cheap as a stock. The only thing I like about Canadian Solar is that they have multiple factories. Okay, a large part is in China, and that is why the stock has also declined further, but they also have several factories, for example, under construction in the United States. And they also focus a lot on battery energy storage, and storing energy will be very important in my reasoning for the future. A key to this sustainable energy transition. The stock uses factor analysis. I bought a small position. I ignore the factor analysis because the factor analysis depends on momentum. See, the momentum is super bad for this stock. So that's actually a no-brainer. Revisions indicate that the analyst expects the company to make less profit than expected in the near future. I do not agree with that, and growth seems poor. Profitability is also poor at the moment. So this is not really The company also does not have a strong sustainable competitive advantage. It is not a great company either. It will not meet Warren Buffett's criteria, and certainly not Charlie Munger's criteria. But this just seems like an interesting value investment. Valuation gets an A+. And why? Because it's not so much about today's stock price, nowadays, but mainly just looking at the price to sales ratio of 0.14. Bizarre, and well below the book value, as included in this model. Now, the risks, yes, certainly. The current market value is 900 billion, but the total debt is 4 billion. So significantly high. But if you talk about an EBITDA of 800 million, then the total debt is still manageable. And a portion of long-term debt is of course somewhat lower than the total debt. And they have a relatively high cash position at the moment for the short term, ensuring that liquidity will not be compromised in the short term. We see that the revenue figures, the growth figures are not impressive, but we might need to take a look at what the 5-year average is, and that is indeed attractively high. Only here did we, of course, have a boom in the sustainable energy sector, so future growth is likely to be considerably lower. Given the overall valuation, the EPS growth does not need to be very high to still achieve an attractive return. So, to sum it up, it seems that the downside risk for Canadian Solar is very low, and that the upside potential is relatively high. But it is not a super interesting company for the very long term, and that is why I currently refer to it as a commodity stock, a cyclical stock. Take, for example, the return on equity. It's not very spectacular at all. Therefore, it's not a noteworthy company for long-term investment. But maybe you are a value investor who is interested in stocks that are undervalued. I have already said the price is the same as many years ago in 2006. The price level is at the same level as in 2017 and several other years. While if we look at the revenue development, well, it has decreased somewhat compared to 2022, but not by a lot. Not a price drop worthy of being more than 70% in the negative. The revenue is still relatively stable, and, okay, the profit has declined, but we are currently in a cyclical dip of the sustainable energy sector, so the chance that this will increase is simply quite high. Of course, you should study these figures very carefully yourself. I already said it, this analysis is purely for inspiration, and the net income is currently very low. But let's say they might be able to return to the level of, for example, 2017 or let's say 2016, then you would have a doubling of the net income. And keep in mind that in 2016 the revenue was 3 billion, while now the revenue is 6 billion, which is a doubling. In other words, it is all very realistic and plausible that this company, founder-led, with a large investment in We Come With Energy, which is valued at 2.5 billion, can simply rise sharply in the near future. In that historical development, you can also see that the current price decline has led to a price level that may be well below the normal multiple, but also below the fair value line. And if we then look at an attempt at forecasting, what you should always take with a grain of salt, and we look at the normal multiple, which is at 11 over the past 5 years. Can we perhaps find an even lower multiple? At 17 years, it stands at 12. Maybe that is even a better multiple. But let's take the lowest. That is 10.2, and the EPS has good expectations. That Canadian solar can return to the same level in 2026 as in 2023, while 2023 was not really the best year either. In my opinion, that was 2022. So this analysis, or this forecasting, from 8 analysts, a rise back to the level of 2023 is not cautious. I would say, if this is indeed the case, if this is true and the PE equals 10, then you would get a total annual return from this price level over the next 2.5 years, 2 years of 150%, or an average annual return of 50%. And the growth could certainly be much more in the long term. One must be very careful here, because I have already indicated that Canadian Solar is not exactly a super strong company. However, I do think there are many advantages to it. But when you talk about a defensible competitive advantage or a strong moat, I question that. However, they are certainly building the moat. That is true. Now, suppose that the EPS grows in the long term. For whatever reason, the model takes into account 17%. Then the annual return can be super high from this level, even 10-fold. And that seems very high, but let's take the PIVAC of 10.5. Then, theoretically, the stock could have a long-term upward potential that is very high, which is probably not true. Now, I just think that, simply thinking logically, the entire stock market, or this sector of sustainable energy, is currently in a concerning situation. Those situations will pass. You have the government. Only the government can stimulate the transition to sustainable energy, but younger people also want to go there. And it is really necessary for the climate, even if some claim otherwise. In my opinion, it is scientifically demonstrable that climate change is indeed real. And, of course, there will also be many advocates who exaggerate. Maybe that's true, but it's just a relevant topic. And if you think logically, Canadian Solar is involved in sustainable energy. They offer various service in the name of sustainable energy and also battery storage, which I think is super interesting, and also project development in sustainable energy. In my opinion, it's a no-brainer that the stock can at least double from this price level over the next 3 or 4 years. But well, you never know. Things can go wrong. Profits in the coming years may be disappointing. The company could go bankrupt. There is always a risk of losing money. So, be careful with what you do. If you have questions or additional information about Canadian Solar, I am also very curious.